Welcome to the Toronto Real Estate Podcast. Today, we are going to talk about the unthinkable positivity in the Toronto real estate market. Now, I know, before you click delete or move on to something else to watch, I'd like you to hang in here for a couple minutes because legacy media, there's an old saying, if it bleeds, it leads. And the same thing is true on real estate or on YouTube, and we put out a thumbnail saying the condo market is crashing, we'll get 20,000 views on it. But if we have something positive to say, all of a sudden we're just realtors pumping FOMO. So let's talk a little bit about what we're seeing in the market. I think it's really, really interesting, and there are some leading indicators that may lead us to believe that we could be at the bottom or that there could be a turnaround in sight, at least for certain, I repeat, certain segments in the marketplace. Who better to have on this conversation than my partner in crime, Smiley, Kori Marin, who's just completed a really, really, really insane week across the city with multiple properties that we are basically renovating before bringing to market. So, Kori, I'm so glad you could fit this in with timing everything right down to the second. So glad to have you here.
Oh my gosh, what a week it's been. And it's funny because I knew we were recording this today. And then I did my hair yesterday in anticipation of today. And then I was like pseudo working as a contractor in this house that had no air conditioning yesterday. And my like beautifully blown out hair went super frizzy. And all I was thinking about was like, damn it, I want to have my hair done for the podcast. So for anyone viewing this, just know I had to redo my Dyson Airwrap just for you. Okay. Now, for all seriousness, it's been an insane week. So if I say anything really ridiculous or out of line or sounds really dumb, please give me a little bit of grace today. It's been insane behind the scenes, like absolutely insane.
HGTV, where are you when we need you?
No, I wish I had a GoPro on. And I just wish I could actually film some of the stuff that happens behind the scenes, because I don't think anyone would ever believe the crazy things that happen and the interactions. And probably my facial expressions would be hilarious too, as I try to mask them with pleasantries. So anyways, putting all that aside, let's talk positive stuff. And I actually enjoy having an optimistic conversation.
For sure.
So, Ralph, I'm very excited for you to talk to us about your thesis. And I know that this is backed up with strong arguments as well, and perhaps even a conclusion. So let's dive in and talk all things market bottom.
Okay, well, let's do that. But before we do, I'd be remiss if not to ask you to please hit that like or subscribe button. We'd absolutely love to hear from you. So if you have anything, it doesn't even have to be positive, even though it's a positive podcast today, it could be negative. Please be sure to comment below. We'd absolutely love to hear your thoughts. So I guess when we're talking about the Toronto real estate market, the first place to start is the condo market, and more specifically, even the pre-construction side of things. And we did have a really strong podcast about that, talking about the Armageddon that's happening right now in the pre-construction market, especially on the assignment side or on the closing side. So I'd encourage anybody to watch that one if they haven't, because it really is a bloodbath that's taking place. But eventually, as all things do, it will pass. And so one of the things that I think is really interesting is this graph, which we're going to pull up by our friends at Talk Condo, Emmett and Roy, who have been on this podcast as well. And what it does is it helps us look a little bit more to the future. And if you take a look at this, you can see what completions are going to look like once we get into 2029, 2030. Now, you have to remember, Toronto's a population, or the GTA is a population of 7+ million people. And by 2029, it's projected to have 3,171 completions and down to 376 by 2030. So it's one of the things we think about when we look at the condo market, especially if you've bought a new property, that if you understand how markets function on supply and demand, we are going down to null supply in the next few years based on non-existent new home sales. And we could be facing this scenario, we can talk about it in a moment, of virtually no properties coming online, new properties coming online for a decade. So, Cora, what do you think about this chart when you look at it?
Well, just for clarity purposes, I just
Hmm.
want to explain what completions are, especially to
For
anybody
sure.
who's super new to real estate. So, completions being new product coming to market, so new doors. Generally, when we're looking at graphs like this, we're talking specifically about pre construction or condo supply, generally speaking. So, in case you're like, what are you talking about when you're talking about completions? What is that? So, that's what that is. It's new inventory coming online. And I think it's just good just to look at the differential here between the blue, which is the construction which is started, and the red being the construction that has not yet started. And you can see how those two colors basically take over one another in 2026, so next year. So they start flipping. It kind of, for somebody who I worry about the condo market a lot, we own quite a few condos. We talk a lot about condos with our clients. I do have to say that when I look on this graph, it does give me peace of mind to know that, like everything always does turn around like a pendulum. This gives me a little bit of sense of hope that for all of our condo owners out there and condo investors, for sure there's light at the end of the tunnel. It's not going to happen tomorrow. We're not promising that. But in the not so distant future.
Exactly. And so the bloodbath that we're in right now, looking at 2025, 2026, 20,000 completions in a year, if that's what it works out to, in taking some of the spillover for 2025 that doesn't get completed, that's not a lot normally for the GTA, and it should not be an issue. The problem that we're having is that when these were purchased 4, 5, 6 years ago, they were purchased at 15, 16, 1700, maybe even $2,000 a square foot. And so the valuations are very far off from market value. And that's where we have the real problem right now. But you can see this will eventually work its way through the system. And as it starts to work its way through the system in the long term, which is as an investor how you have to think, you're going to see very low supply coming potentially for a decade. And the reason why I say that is that new homes that are built, they have to be purchased 3, 4, 5 years in advance of completion. The problem with the market right now, especially on the pre-construction side, is generally when you have a market whereby there are anemic sales, what happens is the price will come down. The problem is that the costs are so high, from development charges to taxes to constructions to interest, that developers really don't have much room. And shockingly, they only operate on around 10% profit margin. So there isn't much room to drop the prices. And so what will have to happen for a turnaround is resale, meaning existing condos on the market will have to start to turn around first in terms of pricing. Only then, when we start to hit $1,400 resale per square foot, only then will people start buying pre-construction, and that's 3, 4 years out. So we could be looking at anemic supply coming online till about 2040, which is just mind-blowing. Now, yes, there will be purpose-built rental, and there'll probably be an increase in purpose-built rental, but there are people out there who really see the value in home ownership and will still always want to own a property. And so if you own a condo today, the replacement value of your property is going to start going up in the foreseeable future. It's just a bloodbath now, and it's a question of how we get to from now to 2028, 2029. So if you're hurting, just do your best to try and hang in there. It will get better. It's just going to take time to work through the system.
One comment about this, and I know we're going to talk about affordability, so we'll save that for the next slide. Just in terms of commentary and some sort of themes I've been seeing in the comment section of our YouTube videos, it just seems to be this huge buyer disdain for condo living, which I have not seen really until like the last year or two. Of course, we saw a little blip of that during COVID when everyone was stuck in their shoeboxes. But there seems to be this reoccurring theme where people don't want to have to live in 500 or 600 square feet. And there seems to be a very negative feeling around condo living. And I'm wondering if that is going to shift. And so for me, who's lived in condos many, many, many years, like almost all of my 30s, I lived in a condo. I personally loved it. It was like living in a hotel, so low maintenance, really amazing for somebody who worked long hours and didn't have time to look after or maintain a home. It was very secure, safe. And then, of course, I had all the amenities, including underground parking and a concierge. So I'm just wondering if condo life will ever trend again, or if we're just seeing a downward trajectory on that style of living. What are your thoughts on that, Ralph?
I think we're talking about a certain segment of the YouTube audience, which tends to like to be negative about everything.
Yes,
So,
true.
yes, I mean, it would be really nice to have a big house in Rosedale, and it would be
True.
incredible. If I just had better hands and was a little faster, I could play in the NHL, but it just wasn't meant to be. And if you look at most major cities around the world, I don't know, Tokyo, Manhattan, people live in 400 square feet and
Mhm.
they're very happy living there because that's where they want to be. What I will expect to see, and we'll get into this a little bit more as we have this conversation, but low rise homes are only going to continue to get further and further out of reach for the
Mhm.
average person. 1.3, 1.4 million, getting up to 1.8 or 2 million. Like without the bank of mom and dad, if you're graduating school, you are never, ever, ever going to be able to own a low rise home. That's just written in the cards. And this is only going to accelerate. And so the chance for home ownership and to get on that property ladder will still be an option, hopefully, on the condo side of things, but again, only for a certain period of time. And we'll talk a little bit more about that.
Okay, fantastic.
So, next, we're going to have a little chat about affordability. It's really interesting because if we get a little bit more of a rate cut, we're expecting one in June. Basically, we're at a point now where, especially for condos, payments are at the lowest they've been in terms of affordability, meaning how much you're paying to service your mortgage, as we've had a drop in prices and now a drop in interest rates
Mhm.
to where they were at the height of the market in March 2022. Now, that is really interesting because at the height of the market, at the same level of affordability we are at right now, people were finding a way to make it work. Now, back then, there were investors that are absent from the market, but it's really important just to think about this for a second. So, we've had another good friend of the pod, Jason Friesen at Outline Financial. Shout out to him. He just drew up this table, which I think is really helpful to give context. We're narrowing down specifically right now on the condo market just because that's where all the bloodbath is. But we're moving from pre construction to the resale side of things. So, back in February 2022, which would be around the height of the market, the purchase price of the average condo would be $799,000. Now, if we look at the column beside that,
Mhm.
in April 2025, that purchase price for that same average condo would be $678,000. So we've definitely seen a drop in price, and we've also seen a little bit of rise in interest rates. I mean, back then the fixed was 2.99. Today it's around 4.19. But if we look at the payments, and that's highlighted right here in yellow, in February 2022, the payments would be $2,688, and the market was rocking. Today, we're $2,638. So if we look out into the future and it looks like rates are going to be trending down over time at another or 25 basis points roughly, that same payment gets even lower to
Mhm.
2,515.
Huge.
So just interesting when you're looking at the resale market. Yes, we know there's a lot of inventory out there, although good properties in the condo market are selling and we're seeing a lot of activity on the good properties. It could start to sort of signify that there might be a bit of a trend line to the bottom of the market just based on affordability as a metric.
And affordability is such a huge theme right now across the board, especially just after the end of the federal election. I could see this giving buyers a lot of confidence moving forward and treading into the market if they saw a chart like this to be like, okay, it's not so scary. You know, my brother and sister and my best friend did this back then, I can probably pull this off. And we know that wages haven't changed or incomes haven't changed that much since 2022. So this is actually really refreshing to see and so smart of you and Jason to pull this together just to give a high level perspective about really where we're at after a correction in the condo market.
Absolutely. Now, rents will have gone down since that point in time. So I don't think there's still an investor thesis yet for this market segment. But for an end user coming down to baseline affordability and seeing how the market was functioning not too long ago under somewhat similar conditions, it's an interesting data point to keep our eye on, especially if rates continue to trend down, which is what we're expecting over time.
And we're still not saying that it's inexpensive for a buyer to get into
No,
the market. I just want to put that caveat out there. We're not saying, oh, yeah, the average condo now is 678,000. It's so easy for you to pull together a down payment when you just graduated from university and you're making $65,000 a year. Not even
we're
suggesting that at all.
We're just comparing affordability in the condo market
Yes,
from the height to today and showing a level of parity.
exactly. Love it.
Okay. So the thing that we're going to talk about is sentiment. And we're going to pull up two data points here from Bloomberg Nanos. So the first one that we're going to look at is consumer confidence. And you can see that we hit bottom right around the time of the election. And now it's starting to trend up, and it looks very much similar to the letter V. So, again, it doesn't mean that things are going to come roaring back, but real estate is very much all about perception and confidence. And it does seem like we've hit a bottom and we are starting to march our way back up. So, this is just something, again, positive, factual information to keep our eye on, along with seeing a trend in the resale market in affordability.
So when you mentioned the letter V, do you think that that stands for victory?
I think it stands for V-shaped recovery
Okay.
and victory for whoever wants to be victorious.
Whoever wants to
Yeah,
feel confident as a consumer, they can attach themselves to the letter V. Well, that's really
exactly.
interesting to see. You showed these slides to me last night, or maybe it was
Mhm.
this morning. God knows when that was. And I was really surprised to see that. But you know what? After any election, there's always a little bit of a bump in a
Exactly.
positive way. And look at, I use the word positive again. YouTube's
I,
not going to like this podcast.
no, the algorithm's going to hate us. No one's dying. Um, and then this next slide is really interesting as well. And it is a look at the real estate outlook index. And
Mhm.
again, we're seeing a V shape similar to the consumer sentiment. So it's interesting seeing them both moving in tandem, showing a bottoming at around the time of the elections. And it is interesting because I have seen a lot of data, more so US specific, where it shows in an election year, prices generally will start to trend down. But the year after or after an election, things bounce back, and they tend to bounce back actually rather aggressively after elections. So it will be interesting again to see if this becomes a trend line and if this V continues to deepen, which would be great to see both from the economy standpoint and from those who are asset holders or looking to invest in real estate.
And this is a confidence index specific to real estate.
Correct.
Very interesting. We're really confident for a long time there with a little bit of a blip. In what year was that? 2023? It's like the only
Yeah.
section. It was probably when interest rates were shifting. Look at us. Wow. Well, we've not been very confident for a while.
I
I
wonder
love a
why.
good graph.
I
This is
wonder
how
why.
I learn. I'm such a visual learner. I
Exactly.
love this. Great job. Okay, let's go on.
So now we're going to talk about the dreaded R word,
Oh yeah.
recession. And it's interesting because in the US, they've seemed to change the definition of recession all the time. And we seem to do the same thing, and nobody knows where we're at. But if you look at GDP per capita, we've clearly been in a soft recession for quite a while. Our economy has been stagnant for a long time, maybe even a decade. So
God.
we've really had a challenging time in the Canadian economy, but there's always fear of an impending recession where everyone just says, okay, we're in a recession. The slowdown is so great that we actually admit to being a problem. Now, my personal theory is we don't see recessions anymore because we're not allowed to have them. And with government,
Yeah.
well, no, with central banks and money printing and quantitative easing and interest rates, we try to avoid them, but in some ways, it just creates a larger and larger bubble without having had the ability to deleverage. But that's a whole other conversation. And just looking at recession, because again, that's something everybody likes to throw out there to scare people. I've just got a couple charts which are just here for interest's sake. If we pull up this chart 5, this is really interesting. Now, this is based out of the US, which is where I could get the best data. But basically, it shows the last 6 recessions going back to 1980. And interestingly enough, what it shows is real estate prices went up 6.1% in 80, 81, 3.5, a slight drop in 1991, barely noticeable. And the only real significant drop was going back to 2008, which was the subprime crisis. But other than that extreme situation, a recession doesn't necessarily mean that real estate prices are going to crash. So it's just one thing that I'd like to put out there when we see people talking about recession and arguing about recessions. If we have a massive economic collapse, yes, everything will get affected, just like in the US in 2008. But it doesn't necessarily mean that we are going to get decimated with our real estate holdings. Just something that I wanted to put out there in a graph form so that everybody could see that it isn't necessarily the end of the world. And, we might have been in one for quite some time, depending upon the way you actually look at it.
I feel like we've been in a recession forever because we've been talking about it for so long.
Exactly.
And just for our audience as well, in 2008, the US had far bigger of a correction than Canada did, just due to our banking systems and lending systems as well. Like we didn't have a correction of almost 20% in Canada.
We nearly just from what I remember from that time period, we just flatlined for about 6 to 8 months, and then we just shot back up on our merry way. And this is just another graph here. Again, shows what recessions mean for interest rates. And you can see in response to recessions, interest rates go down substantially. And we know how important and impactful interest rates are on real estate values. And so if things do continue to get worse with our economy, we definitely can expect interest rates to continue to move down, which is actually what we're expecting to happen. And we've seen how that starts to affect affordability.
So this graph here is showing the correction in the interest rate during that recessionary year.
Correct.
So interest rates came down 4.25% in 1980, down 5% in 1981.
Yep.
Mind you, they were at like 18%.
Well, these are basis points, but yeah.
And then 2001, just over half a point. Okay, got it. That's so great. This is super helpful. I love it. You're doing a great job defending your thesis.
I don't know if it's even a thesis. It's just information and data points specific to what's happening in the market that may give a counter narrative to saying that it isn't necessarily the end of the world and that there could start to be a slow and meaningful bounce back in the condo market. We all know that the pre-construction is going to take a while. But again, looking out at the long term, we definitely can see hope.
And just anecdotally, as I always like to share this, we do have a couple of resale condos on the market right now, and they're not doing that badly.
No.
I mean, we warned our sellers. We're like, you know what? This might not sell. You might have to sell it for much lower than your expectations. We might not get showings. And it's been, I'm not saying they're flying off the shelves. Okay. Just letting everyone know in the comment section now, not saying that, but they're not performing poorly. So I think it's really interesting. And this is just over the last 7 to 10 days.
And in the last month, we've put 2 condos out and sold them for decent prices within a week each.
Yes.
Which was surprising to us. We were not expecting that.
Yeah.
So again, just interesting to keep your eye on, and nothing I can put on a chart or a graph, but we are seeing more interest of buyers starting to come back into the condo market. We have 8 buyer agents at Marin, and everyone is seeing a lot of business starting to come in on the condo side again, which is something that we haven't seen for a while. Does this mean that the condo market's turning around? No. But again, it's a little anecdotal trend line that goes with some of these data points to say that maybe things could start to turn around either now or in the near future.
And as we always talk about, the price gap between low rise and condos, the low rise market in good neighborhoods has been on fire.
Mm-hmm.
Literally, like 5 offers, 10 offers, 12 offers, 20 offers on good quality, low rise homes in great neighborhoods with good schools and a sense of community close to transit. Still doing so well. Like every
And
time I list one of these places, I'm at the open house staring at all the buyers, being like, this is nothing's affecting them. They're just still moving forward with their goals of acquisition.
one of the agents on our team offered on a house in Leslieville last night that had 17 offers on it. Now, again, we're talking Leslieville, we're talking Roncesvalles, we're talking Plater Estates, we're talking Riverdale, but those key areas are really seeing a tremendous amount of activity. Once you get out of central and downtown Toronto, which is where we predominantly work, it starts to slow down dramatically by factors of 2 or 3. So very much different market situations geographically, the further you go out the city, and also relative to the type of asset class or the type of asset within the asset class can really affect the amount of activity and ultimate sale prices of these properties. But again, we're seeing pockets of high performance, which is pretty amazing, all things considered.
Which will have a trickle down effect to the condo resale market.
Once that gap gets large, but once
Exactly.
that affordability gap between low rise and condos becomes insurmountable, which it's trending in that direction,
Exactly.
you're going to start to see a lot more, especially in the larger units, which is where a lot of the activity is, start to get pushed down.
Agreed.
So now we're going to talk about my favorite topic, politics and government policy.
Ooh.
So one of the things that really affected confidence when we looked at those earlier charts, both in the market and in the economy, was tariffs and the threat from the US.
Mhm.
We're starting to see a lot of that wind down. We've seen a trade agreement now done with the UK. We've seen a détente for 90 days with China, which I think the whole world is breathing a sigh of relief. But the other thing that is really important to understand is that we're about 14 months away from midterms in the US. And so they really have to get their house in order sooner rather than later, if that's possible. Obviously, what the US is trying to do is have a reset in trade policies, which we're basically putting the US on a path to $36 trillion in debt. Whether they actually are able to pull this off, I have absolutely no idea. I understand the intent, but I also think it could have been done a little less chaotic. But then some might argue if you're trying to change the world trading system that's been established for 80 years, it's going to be a little chaotic. So we'll see how that plays out. But we are expecting all of this to start to wind down, and we are seeing evidence of that right now in the UK and China. And hopefully, as some of the tensions start to wind down between the two countries, which it seems it has. It seems like the current president of the United States is very happy with our new prime minister. So it seems like all of this is now starting to calm down, which again is really important to markets because markets like certainty. Anything to add to that?
Well, I'm curious to know who is going to be appointed as the ambassador to the US from Canada, because that's something that's on the commentators' tongues these days. And so they've been hearing a lots of noise out there as to whom it might be. And there seems to be some rumblings that it might be somebody that's more on the conservative side. I've heard some names tossed out there.
Hmm.
So it'll be interesting to see how that fares when it comes to
Yeah.
this crisis that we're in. So we'll see
Yeah.
how the
You know what?
negotiations come down.
Trump and Carney, they're old business partners. It'll work
Oh
out
my
just
God.
fine.
I'm not even worried about it.
So the other thing where I am really worried about is the $250 billion budget that's
Oh, yeah.
non-existent, which has been implied by the current government of Canada. And so I think if we've learned anything from COVID, It's that if you flush a ton of money into the system, it causes asset prices to rise, and it also causes inflation. And the other thing, if you look at the current government and made up of the same people that we previously had, is we're going to do $40 billion deficit. It's 63. Oops, we made a mistake. So I really would expect that this $250 billion budget will probably be closer to $500 billion, presuming they stay in power for the next 4 years. And so my interpretation of that, just based on COVID as an example, is we're going to see asset prices rise. We're going to see anyone who owns hard assets or is close to the money spigot do very, very well in this environment. And so I think that this government is going to be very pro real estate. And I think it's going to see prices, especially of real estate, go up. And I also want to just underline that the core basis of the current government's power is from boomers. And what boomers care most about is the valuations of their homes and their pensions. And if those two things are good, this government could stay in power for a while, just strictly based on demographics.
I totally agree.
So we have a little video that we're going to play here. Hopefully it works technically, of our new housing minister talking about home values and affordability. So hopefully we can play that right now.
Affordable housing.
Do you think home prices need to go down?
No, I think that we need to deliver more supply, make sure the market is stable. It's a huge part of our economy. We need to be delivering more affordable housing. The government of Canada has not been building affordable housing since the 90s, and we've created a huge shortage across Canada. That's where the big need is right now, and I'm very encouraged that the Prime Minister and our commitment right now in government is to double construction and focus on the affordable side.
Basically, right now, what we have is our new housing minister answering the question about affordability and saying he does not want prices to go any lower. So there you basically have it from the man in charge himself. And just in case you're not familiar with who Greg Robertson is, he's the former mayor of Vancouver from 2008 to 2018. He personally managed the Olympic Village financial disaster, housing disaster. And if you look at affordability and you look at homelessness in Vancouver, I think that could sort of give you a little bit of an understanding as to who we have now in charge of our housing.
Yeah, I think Vancouver prices almost 3x'd when he was the mayor of Vancouver. And I heard this clip yesterday and I was so excited to come home and show it to you, Ralph, because I felt like I had this little gem of evidence to back up what you wanted to talk about today, knowing we're specifically going to talk about the boomers and why they support higher real estate prices and protecting their pensions. And I was like, we just got video evidence of this right now.
There you have it. They're going to do everything they can to protect home values. They might throw a lot of money at building purpose-built modular home rentals.
Modular.
Yes, owned by Brookfield, but that's a whole other topic. We'll see how all of this plays out. But I think all of this, if you're an asset owner, you're going to do really, really well with this administration. And one of the things, even to take a little bit deeper dive in, is let's talk about budgets. So if you're following the news, the Liberal government has decided they're not coming out with a budget. Now, this is very interesting because if you look at Justin Trudeau, he just said the budget will balance itself. Our current government doesn't even feel a need to come out with a budget, although they did lend themselves $73 billion for spending just between now and June 29th, which is an excessive amount of money to be using in the economy.
With no parliament in session.
So this is fascinating. I'm going to do a little walkthrough of countries in 2025 who are doing an annual budget. Okay? Afghanistan under the Taliban. North Korea came out with a 2025 budget. The Palestinian Authority has come out with a budget. Hamas, while in the middle of, I don't know what, put out a budget. Iraq, Iran, even the Ukraine managed to put out a budget. And yet in Canada, we don't have a parliament in session, nor do we have a budget, but we do have $73 billion worth of spending lined up between now and June 29th. So without getting into the politics of it, I think personally, I'm just going to say something. People should be rioting on the street about this, but nobody really cares and nobody's going to pay attention to this. But this kind of spending will be very, very, very unaccountable spending like this will be very inflationary to asset prices. I think it will devastate the middle class. And I also think it will push a lot more people in the lower class, in the lower classes to be more reliant on government assistance. But it's not really going to be helpful long-term for the economy. But asset prices are going to continue to rise under this plan and probably will do so for the foreseeable future.
We are supposed to get a detailed fall economic update.
Oh, good.
And I do find it interesting that we have just elected an economist to run the country that is not even producing a budget. I find that to be exceptionally bizarre.
Yeah.
Anyways,
this is where we're at. We're here to talk about real estate, and
yes.
This was supposed to be positive, and all of a sudden I find all this negativity
I
and
feel like
sarcasm coming out. And I'm sure there's people going to be mad at us for saying anything against the Carney government because he's amazing, but this is the way we see it. So we're speaking our truth. Hope you don't mind in the comment section. And then lastly, I just want to take another peek. I want to go through this last graph, and I just want to show you here the Toronto real estate market pricing annualized going back. What is it here? It's 1994.
Yep, 1994.
And you can see the trend line of prices rising. We could have gone back further. We could have gone back to 1970. We could have gone back to the 50s. We could have gone back to 1900. I just think it's really important to zoom out and just look at how the market has performed long term. And yes, it's going to take a while to work out what's happening in the pre-construction market. And yes, it's going to take maybe not as long, but it's going to take some time for the condo market to rebound. And yes, the low-rise market is doing well in some pockets and others not. But if you look at all of the data that's out there, it will turn around. And if you zoom out and you look at the history of real estate in Toronto and you just don't read these panic headlines and you just actually think for yourself, I think you'll feel a lot better. At least I know I do, and I hope you do as well, Kori.
I do as well. And the one thing that I always have to remember, and even if there is more of a price correction, people still need a place to live.
Yeah.
Like we just need a place to live. It's not like, some of the more luxurious assets that are out there, like a car or, beautiful clothing or a pair of shoes or dining out. We all need a roof over our heads. And I don't think you're all of a sudden going to see like the entire population move out of the city. I mean, this is the basically the financial hub of Canada. So I just don't see this mass exodus happening because no one can afford to live in the city, or everyone's revolting about, protesting against living in condos or anything like that happening, which is sort of like where my mind goes when I watch any mainstream media, because it's just fear-based and I can get sucked in myself. But I agree. I think that if we haven't hit the bottom, we're pretty close to it.
One of the things that was interesting when we had Mark Morris on our podcast, and he talked about the setup, how we got to where we are with the condo market, the pre-construction condo market. And he just points out, which is very true, is when we have an economy, like if you look at the Canadian economy over the last 10 years, our GDP per capita has been flat. The United States has gone up 25%. In the OECD, the only country that we are ahead of is Luxembourg right now. So when you have a stagnant economy, and when you have an economy that's heavily taxed like ours, where if you own a business or you invest in business, it becomes punitive, the only real way for people to get ahead has been real estate. And the government has actually forced people into investing in real estate because it's the only way to keep up with inflation. And it has been a tremendous store of value. And I think that, along with all the residuals that it produces in the economy, something like 20%, I believe, or 18% of the economy is driven by real estate. The government is going to be very careful, as we saw in that video, to protect the value of real estate. Now, can they make affordable housing that people can rent and modular homes? I have no idea. I have my doubts. But I think if you zoom out and you think long term and you look at all the different types of assets that you can invest in, I think there is a story and an argument that ownership in Toronto long term will continue to perform well. And maybe we're wrong, but I think it's a really interesting thesis to be talking about at a time when there's so much negativity out there.
I'm just going to put a negative spin on the positivity that you just added by just putting out there that I do think this taxing your principal residence might actually come to fruition as well. I know it's been around as a theme over the last 10 years, but I think there will come a point that actually becomes a real discussion because I don't know how we're going to dig ourselves out of this hole otherwise.
Well,
so I do think that is something that might be explored. I mean, I don't mean to add fear into the mix. And I know we said we were going to be positive, but it is lurking out there.
I think that would be a red line with the boomers, but I also know the way governments handle taxes. We're just going to do 1%. That's all, just 1%. Oh, it's our new budget, presuming we start to do budgets again. Oh, let's put it like 2%. Oh, exactly. Just when you look at like personal tax, it's like a slow creep.
Slow burn.
So it could definitely be a factor, but if we were to have that, then where would people invest their money other than Bitcoin?
I don't know.
Please answer down below. We'd love to hear your thoughts. Thank you so much for joining us. We tried to stay on point as much as possible and apolitical as much as possible, but it did peek its head in various points out there. But thank you so much for tuning in. Please be sure to hit that like or subscribe button. I'm Ralph Fox. We have Kori, Marin. Thank you so much for joining us.
Thank you so much, everyone. Bye, Ralph.
Bye.